Welcome to thestockminute.com. I'm Brian Johnson, and we're going to find out if it's another buy the dips type of a move by the bulls coming early into the week. I absolutely be watching for that. Now, bigger picture, nothing really broken from the bull side. Smaller picture, yeah, potentially something broken here from the bull side. We definitely want to be watching to see if these levels of support get broken and or on any kind of a bounce if overhead levels of now resistance hold coming into the beginning of the week. Big hubbub over Egypt and whether or not it's really making a difference is neither here nor there. Sometimes I just think they get a little carried away with the whole news thing. But point being, we have been due for a pullback, and we finally started to see one on Friday yet again. Now we've seen drops before, and they all get bought up by the bulls. However, Friday's was a little different from the standpoint of the market internals were much stronger than what I've seen on previous drops. We talked about the Dow and the fact that it had been the strongest for a while there, holding on very, very nicely to the bull side. But some of that was broken now coming into Friday. It was also interesting to note that some of the bearishness continued into the close, which was very, very curious as well. Love to see that if you are a bear. Let's flip right to a daily. I haven't seen any major news this weekend. I haven't seen anything bad nor anything necessarily good come out of this weekend's news. So I think it's safe to assume that tomorrow's open is really anybody's call. What I'd really like to see is for the bears to continue this push. I'd like to see a little bit of continued weakness within the markets. We've seen candles like this before, right back in this area, and you can see the bulls bought the dips. And a little bit of a drop, bulls bought the dips. So is this going to happen? Because that's what we've seen all the way up here. As we drop, we see the bulls come right back in again. This one a little bit stronger. And once again, I made mention of the fact that I really think when this thing starts to drop, we're going to see some big red candles, and we're going to wipe out some of these smaller candles that we've been building. And that's precisely what we've seen now just from Friday alone. If the bears can continue this onslaught, I do believe that this will also continue as well. We'll see more of these big red bars to the downside. You guys want to be very cautious about your trading at that point if you are not, if you don't know how to short, if you don't know how to go short the market, if you don't know what you're doing. You want to be very careful with your money, and you want to have an exit strategy in mind just in case things don't go your way. You have to have a plan. You have to know when to get in, when to get out. Very, very crucial. So we're going to continue to watch this 20-day moving average here on the Dow, where the other indices have already hit and broken it. This one has not. Gut feeling would say that this one won't make it either on a retest of that 20. That should, if the bears are going to continue this, we should see that in the first couple days of trading. NASDAQ 60-minute as well, dropping way down here into these lower support areas. You can see this kind of big range we're putting in now. We hit here, 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 here. So we're working in a range of a good 50, 60 points right now on the NASDAQ as we bounce sideways. Seeing smaller consolidations leading to big moves, leading to larger moves to the downside. But overall, sideways, if we go right back to where we were after about the first day of trading for the year, guess what? Coming into the last day of trading, we're right about where we were at the beginning of the year. Curious. We haven't really gone anywhere. For you long-term investors, I'm sure it's very frustrating for you. We are due for a pullback, and you can see that this is what we'll get, I do believe, when the markets decide to move. We're going to see this kind of action. One day we wiped out 1, 2, 3, 4, basically 5, 6 days worth of trading here where it was sideways for a while and then up. One day wiped it all out. This is the kind of profits I want to make and I love to make. Now, once again, you can see the consolidation very nice here from a daily standpoint, whereas everything is kind of sideways right now. So any further pushes to the downside by the bears, I think, can easily take us back into these lower levels. Absolutely looking to see if that support level will hold on any kind of a retest. From a weekly perspective, looked like we were in great shape to finish up, maybe sideways for the week. A little bit of chop sideways here overall, bigger picture. And it was all wiped out once again, one day. Lots of volume, lots of participation, coming right back to drop at the bottom here. So you can see that we put in kind of a, if you want to call it a gravestone doji, whatever. Now, I'm really not worried about what kind of a candle it is. I'm more interested in whether or not we can get some follow through based on what this candle is showing us. So, looking for further drops to the downside, taking us into the different levels we've been discussing there on the NASDAQ. SPX 60 minutes, same type of a thing, breaking some of these lower support areas and coming back, getting close to the 200. Now, it didn't reach here because if we flip to the daily, you can see it was struggling with the 20-day for a while. If you guys go back and look intraday, you'll notice that it held up here right around 1280-ish, and held there and held there and held there before finally at the end of the day plopping down and through, and more importantly closing below. Good participation as well, so we have seen at least a start to the bearish action. I just can't get myself sold on it because of all the many buy the dips that we've seen on the way up. It's going to have to prove it to me. However, we start to drop, get a little bit lower, especially down below maybe this 1270 area. I like it back into the 1260 area. I think that should be very good support when it gets there. If it gets sliced through without so much as a pause or whatever, something more sinister is definitely within the works. This is the next level for the bears to try and find. But you can see the same type of consolidation that we saw on the NASDAQ kind of happening here in the SPX as well. So while the bears have a start, I'll be interested to see if it sticks. Maybe we get some sort of a drift sideways or up on Monday, maybe even into Tuesday, but I would certainly like to see the bears start to do something with this market coming into the middle to the end of the week, keeping in mind that there are some economic news coming out this week that may also make a big difference within the markets themselves. SPX Weekly showing that we were going to be sideways, wiped it all out in one big day, now right back down here, resting and showing nothing really too much to give me much indication from a weekly that we're into the pullback, as it were. Nothing really to indicate that it's anything sinister at this point. That's why we have to wait for closes below some of those levels I was talking about before. The VIX, love to see this. If you are bearish, this is precisely what you are looking for, and that is a confirmation by the VIX. Fear did come in. Was it based on Egypt and what's going on over there? I don't know. It's really anybody's guess there. Point being, the chart is what it is, and here you go. A strong move up in the VIX, closing and getting above 19 and closing even above 20. So, like I said, maybe a drift back down here in the VIX or a sideways move, but we're looking for some pretty volatile action to come into the markets if we're going to continue this run to the downside. We've broken and closed above the 20-day. That's only happened once over the last umpteen weeks. You can see how often we've stayed below this 20-week moving average on the VIX. And the last time that happened, we got a gap up the following week and a run down. It went right back into this market. Is that going to happen again? That's absolutely the type of things I'm watching coming into this week's trading. Can we hold? Can the VIX continue to show weakness and fear coming into the markets? Apple 60 minute continuing its little sideways chop. We're seeing these trading ranges on the NASDAQ. It's being reflected in stocks like Apple. Big sideways chop right here within Apple. Looking at the daily, we get the gap down, run up. Big gap up, run down. Then a move back up. Now a move back down. This is starting to kind of look to me like it could consolidate right in through here. A little bit more of a sideways move puts it into what would be like a symmetrical triangle, and absolutely something we're looking at as we push forward in Apple. We want to be very careful of moves above 345. If you're bullish, that's what you want to see. If you're bearish, you're looking for moves below, I'm going to say 335 to 330, somewhere down in that area. You want to start to get very cautious. Now that we've broken and closed below the 20-day, I think investors are going to want to try and take that back if they're serious about being bullish on this stock. Look how well this overhead area held. Done very well with this little line up here, and if we do continue upwards, that's absolutely my continued target to the upside for the time being within Apple, looking to see if it'll stop and hold at this overhead line. If you're looking for targets to the upside, that's absolutely where you want to be looking. FAS 60 minute drew in some new lines for you this week. You can see at the end of Friday, we broke one line only to stop at another line. So these lines are working very well, holding so far very well. Looking to see if it'll get back below this 29 area. You know, I've been looking at that on FAS. I liked it above $30.50. I liked it below 29. Still my range. Overall, same type of consolidation within the markets itself. They cannot seem to make up their mind which way they want to go. Looking at this bigger picture, I'm still waiting for a break. I still like it above 30.50, and I still like it below 29. Those are my levels to be watching. To the up and the downside on FAS. FAZ types, same type thing. Took out the lower line here. Don't know if we're going to be revisiting that for a while, so I want to just go ahead and wipe it out, make it a little bit more clean here. You can see we have broken and closed above this upper blue line, heading our way back towards that $9 area. I do like it on a trade over $9. I do like it on a trade below $8 and about 15 cents or so to the short side. And for you bigger overall investor type people, I really like it above $9 there as well. Same type of targets. Then above it, it's $9.50, it's $10, it's $10.50, it's $11. It's about 50 cents from there forward. So that's what you want to be watching coming into the new week. If there's continued weakness in the markets, it will and absolutely will have an effect on the banks. In that case, we will start to see this maybe bounce. Once again, bulls have been very good at buying the dips. Don't get fooled. Wait for the break. Safest way to play your money. I promise you it'll pay off, and I promise you you'll be happy that with the fact that you waited, and you won't be quite so focused on the fact that I can't believe I didn't get that extra 5 cents or 10 cents out of FAS or FAZ. Who cares? Conservative entries make you money. Hey, that's where you're going to make your money. You might not pull $1 million out of the market as much as we would all like to, but you're not going to lose $1 million in the market, which is going to blow up everybody's account. Once you're out of the game, that's it. You're done. No more. We don't want you there. We want you to stay in the game. And that requires that you know what you're doing, that you're confident with what you're doing, and that you understand risk management, when to get in, when to get out, where your targets are at, how to protect yourself once you're in a trade. Those are all very, very important. Very important. So, all right, we will be back with you again tomorrow night. I'll go over the trades that I had for my subscribers last week in tomorrow's video. Stick around for that. See you then.